I'm about to show you my entire investment portfolio. I am investing to reach financial independence in the next 10 years, and for me that looks like a pot of around about £500,000. At this point that'll be enough money to pay all of my bills until the day I die. Currently I have about £70,000 invested, and that means I'm about 13% of the way. For the last 3 years I've been using Trading 212, and in there I've built up a portfolio of about £58,000 there or thereabouts at the point of recording. If you've just started investing, it's hard to know what to do, where to go, what to invest in, and there's not that many people that actually show what a real portfolio looks like. I'm just a normal guy investing into a normal portfolio. So what I want to do is show you exactly what I'm invested into, why I'm invested into it, the returns that I've had as a result of it, and basically give an overview of that portfolio. So here it is. As I said, I've got about £58,000. It just dipped today quite significantly, actually. It's dropped a couple of percent. That's the nature, though, of investing into the stock market. There will be up days, there'll be down days. You've got to ignore it. It's about the long-term game. But for me, I've got it invested into 3 pies, as they call it in Trading 212. This is really good. It helps you if you've got different strategies, different plans. It helps you to break down that approach. So I've got dividend pie with about £18,000 into it, so it's about 3% up. I've got a funds pie, and that for me is where I'm going to put the majority of my cash. And I'm actually currently still trying to increase the amount I have in there versus the other pies. And I've got a grow pie, and that's coming in at around 45% up, which is clearly really good, but it is the smallest pie of the lot. Reality for me, that means that I've been invested into funds over 3 years. So the market, given the timings I've been invested, have put me at about 2.5% up. The stocks that I have picked myself have put me at about 45% up. So I'm beating the market, yes, in the ones that I'm choosing, but in reality, at the end of the day, that is always going to be a smaller percentage of the picks that I make. Now, Trading 212 is the platform that I've been using for, like I say, 3 years. It is probably the best one out there. It's the cheapest one. It's the easiest to use, and I'm a big fan of it. So if you're interested in starting one of these portfolios yourself, there is a link below in the bio or wherever it is, description. Click on that, deposit £1, and you'll get a free share. It's as simple as that. It's free money, basically. You don't even need to keep investing. Just deposit £1 and you'll get a free share. Typically, they're worth about a tenner. So looking over the investments that I have, I've got about, about 20 in here. Like I say, the majority are in funds. There's a few growth ones. There's a few dividend ones. So we're just going to run through them quickly. Starting at the top, I've got 3M, which is one of the worst performing that I have. I'm about £274 down into this. It is a quarterly dividend payer, however. So it gives me about 15 quid a quarter. Obviously, that doesn't make up for the difference in terms of how far down it is. I'm happy to hold it for the time being, but it is not doing as well as some of the others. Alphabet, nearly 30% up. So at the moment, the S&P 500 is propped up by about 7 businesses. In reality, they have absolutely stormed the S&P 500 over the last 12 months. However, if you were to take those 7 businesses away, it was pretty flat over the course of the last 12 months. So I've been lucky enough to pick a few of them into my portfolio. I'm not going to be keeping them forever. And I'm currently in Alphabet, which is Google, of course, nearly 30% up. That's a 300% return. In Apple, I am 30% up, which is a 600% return. And those are the two. Oh no, I have one more. Microsoft, where is he? There he is down there, 44% up, which represents nearly £800 return. So those 7 businesses have absolutely flown over the course of the last 12 months. But be careful. That doesn't mean they're going to do the same over the next 12 months. So it's all around making sure that you don't have too many eggs in one basket, diversification, invest more into funds and individual stocks, unless you are Warren Buffett. And if you're watching this, big boy Buffett, good morning to you. Hope you're well. I've also got some UK businesses in here. Actually, they're more cost effective. So everything is within an ISA that I have. But if you invest into US businesses, you will pay a stamp duty charge. So on all dividends that you receive, you'll pay a charge. There'll be an FX charge as well. It's only a small amount, but if you're invested into UK businesses that you think of the future, then it's more cost effective from a tax perspective. So Aviva, I hold this in my Hargreaves Lansdowne account as well, just slightly down, but that plays a really nice tasty dividend. What is the dividend actually at the moment? It is coming in at 7.35%, so really strong. So of that £1,000 that I've nearly got, I'm going to get about £73 a year paid in dividends. Global iShares Clean Energy has been smashed to pieces over the last couple of years. It did really well in COVID and it's dropped down ever since, about 30% down on that. But as you can see, it is, if not my smallest, one of my smallest holdings. Biotech, I've got about 4.5 grand invested into here. I'm hopeful for that for the long term. I'm going to hold that one for the long term as far as I'm concerned at the moment. I think that that's got a great potential. There's a lot of pharmaceutical businesses in there, amongst a number of other things around the future of medicine. Johnson & Johnson's another US dividend business, not doing too well, 3% down, but again, it's a dividend payer. Legal & General is a great dividend payer, UK dividend payer, and that brings in 7.78%. So really happy with that one. Lloyd's up and down all year. It depends on what's going on with interest rates, inflation. It's all over the place. Microsoft, as I mentioned before, doing really well. Pepsi, about break even on that. Again, all of these businesses I've been investing into for 3 years. The peaks, the troughs, the ups, the downs. Obviously, I've had dividends paid on all of these, which puts me in a better place. But every single one of those dividends, I've reinvested back into those businesses. Realty income, that has struggled a little bit over the last 12 months as well. Income is a REIT, of course, which is basically your way of investing into property without actually having to buy any property and deal with people, tenants and all of that jazz. So realty income pays a dividend once a month as well. Once a month. There's not many businesses that do that. It's part of the makeup of how it operates, and it's actually forced to do that, believe it or not. So I get a dividend of about 15 quid a month every month for holding 3,200 in realty income. So, you know, that compounds as well. That invests straight back in and compounds and grows. Rolls-Royce, the best performing business that I have within my portfolio in Trading 2 and 2. Did a video about that about 12 months ago, saying it was going to increase by 100%. Got that wrong, increased by 200%, but I'll take it. Unilever, global UK brand business, owning brands throughout the entire world. Dividend payer, quarterly dividend payer. I'm doing okay on that, slightly down, but I'm more than happy to hold it. All world, 8.5 grand, second biggest position that I have here. This is basically the biggest businesses in the entire world. Now, it's heavily weighted towards the US because the US is the biggest economy in the world. But if that was to change in the future, so would this fund. And it would flex and it would alter and it would be self-cleansing so that any of those bigger businesses that get smaller, they get knocked out. The new bigger businesses come in. It's a piece of cake. It's an easy way of investing. Emerging markets, again, struggled over the course of the last year. I'm about 10% down in that. More than comfortable to keep holding that, though. I'm sure that will come back. S&P 500, biggest holding by far. £17,500 in here. 6.5% thereabouts return on that. And actually, it is going to probably be the biggest holding that I can continue to have, maintain. I'm going to keep that as a large holding, probably till the day I die. Virgin Galactic, well, I'll go into that bloody nightmare. Walt Disney, that just seems to constantly be 35% down. It feels like it's been 35% down for about 3 years since I bought it. In reality, I don't have strong hopes for that in the long term, getting back to where it was. If I can bridge some of that gap, that 330 quid, I'll probably sell that. So that puts me in a position then, so it's a bad day as you can see that dip. I've got 55,000 invested and I've got nearly £58,000 in value in here. I've had, over the course of the last 12 months, about £1,000 in dividend return as well, so that's nice. This clearly is going to compound and grow, and it puts me on track to deliver against that target of 500,000 by the time I am 50, which is in 10 years time, because I'm bloody 40 now. Right, thanks for watching. Any questions, let me know.